we are going to usher in 2023 for the equity markets with perhaps the best-known veteran of Indian markets, Raamdeo Agrawal, Chairman and Co-founder, Motilal Oswal Financial Services, joins us now. Good morning, Raamdeo. I wish you a very prosperous 2023. Thank you very much for starting it with us.
Very good morning and very happy New Year to you and all CNBC viewers.
Thank you. Happy New Year to you as well. How are you feeling about the markets?
Okay, there's no excitement of grossly undervalued market, so you're going to rocket or something like that. So, and then global uncertainties are too many. So, right now it's a kind of a subdued thing, but GST collections are very well held up. That's one data that gives you confidence that things are all right. So, I think things are all right till November, December. So, I think I would believe that 23 we're starting in a very strong note of economic activity, heading into a lot of elections and things like that. And worst of global uncertainties, still the Ukraine war is on. Still inflation war is not over. China is still struggling with the COVID. So I think we have more of the same from 22. And hopefully first half will be somewhat like this. Second half, let's see, 6 months is a very long period.
Yeah, if we overcome those, then we could have a glorious second half.
I don't focus that much on where the market is headed. I'm more focused on where my stocks are.
I'm coming to that. See, first of all, congratulations, you've moved into a new house. Yeah. You would know what real estate is like. So tell us if that's going to be, another trump card year, another big year for real estate stocks.
Yeah, stocks are different from the real estate. Real estate itself is very expensive. At least in Mumbai, what I hear, Andheri, Juhu and all, they're more closer to 75,000-80,000 rupees square foot for a worthwhile ready stock. So that seems to tell me that there is a very good market. Now the issue is how do you execute? How much inventory you can deliver in the marketplace, and how your authorities are really hearing this as a problem rather than as an opportunity to
to kickstart the economy.
Yeah, so I think if they push the system well and permissions and all the hurdles are being cleared, because if government wants or bureaucrats want to clear the hurdles, they can clear it overnight. So once that thing is done, then it is for the entrepreneur to play the game of quick completion. Consumers will demand. So I think it's...
So should I understand that you don't want to play real estate as one of your top bets?
They're not... See, for me, year of 23 will be practicing consistency, because that's what the wealth creation study we did. Okay, and they are not particularly consistent performers. And so, yes, of course, we'll look at it, some of the bigger ones who are stable, large, and they have they have the potential to be consistent. But the way they have played in last 10-15 years, that has not been very consistent. So I think now RERA has come, playing ground is very much more certain, I would say, consistent, I would say. So it is for the entrepreneurs in real estate to deliver, particularly the corporate entrepreneurs who have come in. They have a large opportunity to deliver very predictable performance going forward into, and as we see those things are happening, maybe we'll start getting interested slowly into the sector.
Okay, you can wait. Our director very helpfully pulled up all the sectors that moved last year and which didn't, and the big trade really was going long on banks and short on IT.
Yes.
What do you think the big trade of 2023 will be?
Yeah, so I was wrong in IT. I was right on the banks. Banks were very clear that yes, it's going to happen. But I didn't know IT will be. But these two are like literally 25% each. Or actually, bank is bigger if you combine private and public. So financials, lenders are like more like 30%, 32%.
Yeah.
Banks are, IT is about 23-24% of the total corporate profits. Now, I don't think both can do well together. The way index is constructed, I don't think both can be at a high. Anything can happen in the market, but I'll be very surprised that banks and IT both will be at a high. If bank is at high, can you believe that people are selling, IT is down by 25-30% and PSU banks are up by 70%. So that's the contrast you're seeing, So I think markets are rotating, and there was an excess kind of depression in PSU per se, but all the PSUs. Literally no wealth was created. In fact, they were the biggest destroyer of wealth in the last 5 years. And now I think finally enough is enough, and there is some rally in this particular
sector. But it's good to go for more. The banking
looks like banks definitely has some more steam, because there's a credit cycle. They've just started lending. they have to get into bad lending before the trouble strikes. And you will know first, you know, when
there is exuberance.
Yeah, exuberance and exuberance will not happen in the same place where it happened last time. Last time it happened in corporate loans. This time, I don't know where it will happen.
So since we're talking about banks, I had to ask you about the HDFC group. You know, we put out a study where we talked about how all the stocks, HDFC Bank, HDFC AMC, HDFC Life, the valuations are looking attractive, and there's been a large degree of underperformance in the last many years. You think the fortunes will turn this year?
This year, I don't know, but it will turn. Because markets can take much longer than you and me can forecast. But if there is a value, if they keep growing at 20% plus and the P multiple remains at 20, I don't think it can stay for very long. Such a credible name, and if there was a fear about the transition, all the change over merger and change in leadership and all, even that will be proven in next, I mean, it's already 2 years, another year or so. I think then people will reassess. And what happens is that there were things which were below HDFC. So they have come up. Now they will be at HDFC level, and market would want them to go ahead, but it cannot go ahead unless HDFC also pulls up. So, you know, it's a relative kind of a situation. My sense is that better days are ahead. In terms of valuation, earnings will come whatever for the sector and the companies. But it is more about in fact, the bigger game in the market, I mean, if you see the rating, de-rating on 12 months basis, is not so much about the earnings. It's about the change in the P multiple. Like say private sector, public sector banks were at 0.2, 0.3 price to book. Now they are at closer to 1 time. And that's why they are 3x, 2x, 5x. Not because the earnings are that much bigger.
You know, there are these pockets which did really well last year, whether it's defense, rail PSUs in general. Is there merit in adding more to these names?
Frankly speaking, I have not done a lot of work, but because Atmanirbhar Bharat and the kind of at border, government's commitment to become much more, Atmanirbhar on defense procurement, and the size of the economy which is becoming bigger, borders are not very, friendly right now. So I think the tailwind is very strong. Now, the only thing is that it's little lumpy, you know. So you have to look at the companies which have done well in the past. And they are all monopolistic, you know. All of them are monopolistic, which are more asset light, you know. But I think, frankly speaking, that could be a very interesting sector to see.
Okay, home improvement as a theme. I mean, you have Astral in your consistent performers list. More like that, maybe Century Ply. I don't know what you think of as home improvement. Serra.
Yeah. See, if Indian economy keeps growing at 6% plus, I mean, like for 23, 24, the prediction is all the pundits who they're talking about 6% plus. If that 6 to 7% it comes, and with that say 5-6% inflation, you're talking about 10, 12, 11% nominal GDP growth rate. And if that is associated with say even 12-13% corporate profit growth, I'm not asking for 15-20%, 12-13%, I think we'll do very well.
Okay. No, it's not over 6, sir. The average is lying between 5.5 and 6, but even then your nominal GDP number seems to be the consensus number. I take your point.
So nominal, if it comes to about 10 to 12, and we match the corporate profit to GDP at 12, because now raw material prices are little lower than last year. So I think there will be a little more recovery on the corporate profit side, and hence it should match the earnings.
Then give us the alpha. That is your comment for the earnings as a whole. Right? 15% earnings or 13% earnings. Where will the alpha? See, chemicals was once a big season, you know, and the alkyl amines and stocks like that. Would SRF, would all these still be a way to go? Where would you see alpha? Sectors, if you don't want stocks.
Sectors.
Or even stocks, I mean, whatever you feel, depicts the alpha well.
Yeah, so, no. What happens is that the consistency which they have shown in the past, they will continue. Most of them, they will continue. So don't go too much away from the ones which have performed in last 10-15 years. The problem is that we are too much focused on future. We don't look at the past. And the guys who have performed in the past, they are the guys who are going to perform most likely. I mean, like not 100%, but 70-80%, those are the guys to look at. Now, if they, say like you said, Astral and all, they have not done well because the polymer prices went through the roof. It could be the time for this die-hard, fast runners, for them to come back. So I would look at them. I mean, the companies which have performed very well, but they are right now literally out of favor. Like entire IT, they have done very well.
Yeah.
So now, is it the time? Is it after 5-6 months? That I don't know.
What about new age tech companies? Is it the time to buy? I mean,
Digital companies, yeah, that's
Nykaa, Zomato,
yeah,
Paytm.
they start studying them because they will change the track. Last year they said growth at a loss. So they were not ashamed of incurring losses. They were very proud of incurring a lot of losses. Now they are saying we have to get into profit.
Profitability.
Like Baiju said, we want to be in the profit this year itself. So that kind of change. But saying is one thing, doing is yet another. And actually making profit to the extent of their market cap. Yeah. See, basically they have 10,000, 12,000 crores cash. So of course, first level of valuation is that they are worth that much. Because outside that, they're incurring losses. Yeah. So to justify, say from 10 to say 30, 35,000, 40,000, that is for additional 30,000, they have to show that they can make that much profit. There's a lot of promise. But we bought the promise last year. But now the life has changed. Today you are saying, show me the money and then I'll give you the valuation.
So would you buy now or would you just wait to see profitability?
I would now, having burnt fingers once, I will look for the profits to be visible.
Okay. Okay. Finally, I want premiumization. We called Bajaj Auto. We've spoken to people on the channel. Everyone's speaking about premiumization.
And two-wheelers?
Generally,
yeah.
Even cars, you know, premiumization seems to be the theme. So would you look at people who cater to the upper class? You know, your favorite, Titan, stocks like that. Is that a theme? Yeah. Or is it staples? What caters to rural masses?
Like, say you said Titan. Titan per se is about not premiumization. Not that much about the premiumization. It's more about from unorganized to organized. Now we know the jewelry market. Yes. You go to any city, they're not number one. Titan is not number one in any city. Yeah. They are number 4, 5. There are 4, 5 local jewelers who are number one. So, I mean, in 30, 40 cities also, if they come anywhere close to number one, I think the size will be gigantic.
Okay. All right. Thank you very much, Raamdeo, and hope you have a superb 2023 yet again. Yeah.